clearly my fault. I was clearly distracted, and I caused much more injury than that. So the next step is okay, the insurance pays $25,000, but they turn around and sue me personally for $1 million.
Right.
So now I'm on the hook, and let's say I don't have $1 million in assets.
Right.
What does that mean? Not only to my current income, but let's say I'm in my 50s and I'm thinking about retiring.
Right.
What does that do to my retirement income?
Right, yeah. Well, it means that they're at risk.
They're
right?
at risk, right?
Yeah, it means that you now have to find your own representation and pay for your own legal counsel. And then it means that if there's a judgment over and above what your limits were, that is going to come out of somewhere.
So I either have to sell assets, or they're going to guarantee my wages
Right.
for the rest of my life, potentially.
At least 20 years, right.
So that's pretty, I mean, that's a pretty, so if I think about that, I'm going to have 20 years of my wages potentially, that's the risk, potentially guaranteed, or I'm going to have to sell assets, sell that beautiful property that I was talking about, or figure out, where I'm going to come up with that money. There could be liens placed against my property, whatever it might be. Or I could make that conscious decision, I'm going to transfer the risk to that insurance company, and I'm going to carry a much higher liability limit. When I look at people's policies, to be honest with you, I get lost in a numbers gal gets lost in the numbers. But you look at those limits, I see a lot at $100,000, and I'll say, gee, that seems a little low because I know we have a lot more, and it doesn't seem to really increase the cost of the insurance when we're talking about
No, that's
not really.
Right. When you add that additional layer of coverage over and above, a standard limit, it's usually not expensive at all. Yeah, that's the sad part.
Right. So I mean, you look at, maybe over the course of the year, a couple $100 more that you're covering to increase, sometimes triple your liability coverage.
Right. It could be less than that even.
Explain to people what replacement value is and what the other alternatives are.
Right. Yeah, in this area, replacement value on a home insurance policy can be confused because people will think, well, if I lose my home, I can replace it with one across the street for X amount of dollars. Well, we live in an area where market values are significantly less than the cost to rebuild. And when you talk about replacement in insurance terminology or contractual language, replacement means rebuild. What's it cost to rebuild this home? So the sticky wicket with replacement value versus not having it is not only in the event of a total loss, but in the event of a large partial loss. It's not uncommon for us to see homes, for example, around the area where we've had a major loss, that the structure's still standing. And without adequate coverage or replacement cost contract, many times those people are in the worst scenario than even the person whose house is on the ground and destroyed, because now your choices are severely limited on what I can do with the house that's still standing but yet trashed on the inside.
So you basically have to rebuild if you want the coverage in that situation, right?
You're almost forced to, right?
Yeah. And so, your point is valid, because especially in this, region that we're talking about, if I were to quote out a replacement, you're probably $250,000, right? Replacement, if I had all the materials and labors and all of that kind of stuff. But if you were to look at listings of some of the homes in this area, people are like, I don't get why I have to have so much in replacement value.
It's not uncommon for replacement value in our area to be $125 a square foot. But market value could be half that. It could be $60 a square foot. I mean, it's all over the board depending on where you buy, what you're buying. But
tell us a few stories of where, it's been really important to have the proper insurance. I don't want to scare people, but I want to make people aware of why it's so important to have good coverage on big parcels of property.
Like
that.
Farms, you mean?
Yeah, farms or, even hunting ground, anything like that.
Yeah, it's the more land you own, the more chance you have of somebody being on that land, whether they're supposed to be or not. And we even have a certain duty of care that we owe trespassers as owners of land. I think what you're getting at is that the more land you have, the greater exposure you have. The more assets you have, the greater exposure you have. The more wealth you have, the more a target you are, right? Attorneys know that there might be a payoff in certain areas of certain types of losses involving certain types of people, and there might not be in other people. And so people that have assets to protect, the liability piece especially is very important.
But there's also something that has been defined as an umbrella policy. Explain what that is and how that can be so beneficial.
Right. This gets back to when we're talking about liability insurance and protecting myself from those people who might be injured, and I'm responsible in part or in whole for their injuries, right? So that can happen when you're using an automobile. That can happen at your residence. It can happen when you're at Wegmans and I'm pushing my cart down the aisle and I happen to hit a cart that knocks over a baby or whatever, right?
You don't think about that,
right?
But right.
It doesn't have to happen on my premises, I guess is the point I'm trying to make. So an umbrella policy basically provides an additional layer of liability protection for over and above what you carry on your auto and your home insurance.
Okay.
So it's usually sold in increments of $1 million and requires an underlying limit that you carry on all of your underlying policies, whether it's home or farm or auto insurance. And it's typically, an underlying limit is required at $300,000 or $500,000, it depends on the company. But in a scenario where I owned a couple vehicles in a home or a ranch, let's say, and I had $500,000 on my vehicles and on my farm, I'd have then $1 million over the top of that, or $1.5 million worth of liability limit that would come into play if there was a bodily injury claim against me or a lawsuit against me.
A couple $100 a year, quite often. You can have this added insurance policy, and again, just thinking about retirement assets. Basically, most IRA assets are protected up to $1 million,
right?
But the income still is not.
That's right.
So where I think about risk in that particular situation is when somebody is going to be living off from that retirement money, right? And people think, I don't have those kinds of assets, but they don't always think about the income associated.
That's a really good point. If you were to Google this, I'm not an attorney, but typically $1 million worth of an individual retirement assets are protected from attachment or lawsuit. But the distributions, that's a different story, right? So if I get in an accident today and there's a significant claim against me and I lose, and all my money's in retirement assets and it's under $1 million, I might be okay. But when I start to take that money out, that becomes an issue. And once a judgment is levied against me, most attachments are good for 20 years or longer. So that means 5 years from now or 10 years from now when I retire, potentially those distributions are attachment.
Or if you're already in retirement, then
Right.
those distributions are attachment. So many people know that age 70 and a half, it doesn't matter. You have to start taking distributions from your retirement account. So if you're already in that neck of the woods, if you're over 70 and a half and you don't have a say as to whether or not you can defer those, though that income from those assets are actually used as fulfilling the judgment.
That's right.
So when you meet with people, when you sit down with people and you start talking to them about proper coverage, I know, like I said, the number one thing that I always hear is I'm paying way too much in insurance.
Right.
And I always try to use examples of like, well, do you think that you'd be paying too much in insurance if a $300,000 judgment was paid out for you, or if, if your home was lost and, because I've had people ask me, now that I don't have a mortgage, should I drop my homeowner's insurance? And I've, yeah, exactly. And I've said, well, do you have $300,000 set aside that if your home is destroyed, you can use that money? If not, then probably not a good idea.